All right. It's Jared here from Crypto Plan. How's everyone going? I just want to jump on and give you all a quick update on what is happening in the markets from my eyes. Because, like I said, kind of laying back on the daily, kind of trying to get clickbait video views. I know that's not going to help out my channel and get so many likes and subscribers, but I figure the ones of you that are listening, some of you say you like my opinion, so I'm going to give it to you. Firstly, I want to update everyone on Premier African Minerals. Now, I'm sorry I didn't kind of get this video out a couple of days earlier, but I just want to kind of use it to draw out an example of how powerful stage analysis is and using the 30-week moving average and volume to define breakouts and ideal entry points. So before we get into any more of the content, please do like and subscribe to the video if you do get value out of the technical analysis that I'm sharing. Now, so Premier African Minerals, just to lay it down, and this is Crypto Plans about explosive crypto gains, but I'm also identifying assets, low market cap stocks that are going to behave like cryptocurrencies, and Premier African Minerals is definitely one of those, and it has proven to have extremely volatile runs, similar to the likes of many of the cryptocurrencies out there, to the upside and the downside, obviously, because it's a small cap mining stock operating a lithium project in Zimbabwe. So there's naturally a bit of fear and doubt going on there of whether that's going to come through. But let's ignore what it's doing, just knowing that it's in a bullish market, that the lithium price is going up and the market in general is bullish. So this particular stock since 2017 hasn't had a good run. So it's kind of ran all the way down, found a bottom 23rd of September, and then it found another bottom, which was a slightly higher high. So you would have had your blinkers turned on at that point when it made a higher high and possibly some volume spikes there. So 1 and 2. So you kind of knew something was going on, even if you weren't watching the news. But the reality is, where I started to get interested in it is when you see this price tightening. And at the time, I didn't know about stage analysis, but I knew about this kind of constricting, this range where prices are attempting to break out of a range every day. So there's like a tug of war between bulls and bears going on. So that was like 5 or 6 days there. So from this day onwards, so we're talking about 30 days there. So a full month, price was going sideways. So I was accumulating a position then, not really knowing how explosive this stock would be, but then it broke out, right? So we saw it break above the 30-week moving average there. So we're on a daily chart, but that's still the 30-week moving average. And we saw some big chunks of volume, right? So it broke out there. Yes, you could have bought in there, held, and had a really good run. But luckily enough, we had a pullback. So we had a pullback that was pretty close to that 30-week moving average. So, Stan Weinstein says, if you're a trader, you buy the breakout and hold and don't worry about the pullback. If you're an investor, you buy the pullback. So you put in half here and half there. And that gives you an average price somewhere around there, which, once again, 1, 2, 3, 4, 5, 6, 7, 8, 9. So you had a couple of weeks there where you had it in a range and you could potentially have got it, around kind of 6 or 7 cents there. But once the breakout really got momentum on the 5th of March there, it ran and it ran and it ran, right? So if we go back to our weekly chart and just have a look at what it did do. So, the first week it ran 80%, the second week it pulled back a bit. That was, your last chance saloon. And then the week after 40% and then 150%, So a total gain, from this, just below the 30-week moving average of, 900% there if you had caught the bottom and sold the very top. But now I didn't, and I think I sold a third of my position somewhere up here because I didn't really know what was going on. I didn't understand as much about stage analysis or technical analysis then, so I thought, this thing's going to keep going. So I think I had orders up here in the 6 cent, 0.6 of a pence range that never filled. So I got a little bit greedy, and I've learnt my lesson because I would have loved to have sold out there, been out of the trade, and then looking to get back in over here, and it is happening again. So we've had a stage 2 breakout, a stage 3 topping, reaccumulation, found the 30-week moving average again, and now we're in a stage 1 base. So it's kind of fallen down, stage 4, topped in stage 3 very quickly, stage 4 retracement, and then kind of gone into stage 1 again and hovered around that moving average for the last several months to up to a year there. So like at least 6 months it's been going sideways. So yes, I was buying a little bit more here, and I've bought, kind of bought a little bit more back in there, but essentially been holding this one and waiting. Like I said, I would have loved to have sold out somewhere near the top here, got out of it, and then bought back in somewhere around here. But if you're a trader and you want quick gains, you would have noticed that once again there was an extreme confluence going on. So the other thing I've got is an arc here, and I've got a long-term trend line. So now we knew this kind of angle here, it's separated from that angle, and then it's come back and it's following that angle again. So it's back to its original trend. So I thought, well, that's interesting. It's reacted to that original trend. It hasn't broken down. The moving average is flat, so the 30-week moving average is flat. Price was kind of, fluctuating and hovering. Volume started to come back in last week, and I thought this is very interesting. So we've had a breakout, and yes, there is some news saying that there's a potential JV or a partnership deal going on. That's true, but essentially the market's going, there's some results around the corner. We're speculating on something about to happen. So if we go back to the daily chart, you can see it on a more granular level that on the 31st of January, volume doubled from the day before. So if we go even closer and kind of get a better picture at it. So there was 79 million shares traded on the 28th of January, and there was 161 million shares traded the next day. So volume doubled, doji candle, big fight between bulls and bears. So that's also a good indicator of some kind of a change in the charts. Then bang, what happened the next day? 12%. Doji candle again, another couple of percent, another couple of percent. And these candles are just sloping up and changing the velocity, changing the trend in an upward pattern. Volume is coming in huge numbers. So we know that big institutions are buying in now, or larger investors. So once again, all the stars were aligning on this one, and this massive confluence of what have we got here? So we've got the trend line, we've got the breakout of the 30-week moving average, and we've got the volume. So all those things were pointing to the fact that we were going to have that weekly breakout, the breakout on the weekly chart of volume. I'll just get all those things off the screen there and just kind of acknowledge that. Now, the beautiful thing is, if you were interested in trading this one, I'm not saying it's the worst time now. Like, as a long-term investor, it's a lithium play that, could definitely increase by large amounts of value. But the potential is that we still could see a pullback. We still could see a good couple of run, reach some kind of resistance here, pull back, tap the edge of the arc, get back in kind of somewhere below this. I think anything below this yellow line here, but anything below this 0.273 pence is a good entry point. And my targets are 0.6 of a pence. So a good 2 or 3x from here. But I mean, naturally, I'm happy that some of my bag was bought down here. So just thought I'd just point that out that, whether it's a low market cap stock or a crypto, an altcoin that's a low market cap, these explosive gains can happen. These big 500, 600, 700% moves can happen quite easily. Another one I've been following is Mana, so the cryptocurrency for Decentraland. I think this one's a really good opportunity. After it had a good run, it showed us that there's popularity there. It showed that there was volume flows, after Facebook changed to Meta and everyone jumped into cryptos that were to do with the metaverse. So basically, we've got this particular crypto that traded on exchanges, kind of had a big bear market, or as in went into a bear market like all crypto's been in, kind of hovered around. There's been no moving average, but it's popped out and really extended itself far from its 30-week moving average. So it got as far as 316% from that 30-week moving average. So what are things, what goes up must come down, right? So this thing's pulled back down. What's it done? It's tapped just below the 30-week moving average on a trend line now that we can make from the breakout there and 1, 2. So wicks have come down and proved that that's our that line there is kind of our long-term trend line. So any entries near this line are going to be good entries in the future if it continues on that trend. But obviously, crypto is volatile. It breaks out of these trends. So I saw this one kind of, breaking out of this downtrend here. Good one to get into, even on these pullbacks back down to these 30-week moving averages once they'd formed, and these longer term trend lines. Really good entry points. When they show that they bounce off them, it's kind of safe to get in because it hasn't broken any trends. Loopring the same, more like been trading in a channel. Like this one's had a longer kind of a cycle. It's been around a bit longer, but big downtrend channel in the longer bear market, and then since the March it's gone up in this channel and it's followed it very nicely. So from down there in 21 cents and we got all the way up to $3 or $4 there, pulled back again. So once again, wanting to break out of its 30-week moving average. There's some decent volume been coming in, decent volume there. So it tells me that people are buying the dip or buying the the low on this, ready for that last leg up. So Loopring's another one I've been watching. Another favorite one of mine is Royce, but I'm not trading the stock. I'm trading the leveraged asset. So on Trading 212, which I use for trading, there's a 3x share that you can buy that basically every time technically for every percentage point that Royce goes up, this should go up by 3%. So you can see over here that when Royce really crashed, the next week we had a 400% week. So there's some huge gains to be had there. And what I'm seeing is this thing grinding its way into a wedge. It's obeying the rules of stage analysis. So it's been in a stage 4. It's been stage 1 basing, so going above and below the 30-week moving average. And then I'm looking for it to actually bust out of there and give us some good volume like this again, maybe even higher, and just really shoot out of there. And right now, looking at 0.8 of a pence, and targets are up there in the 20 pounds. So we're looking at a good 10 to 20 times our money if we can hold on to this one. And that could happen very quickly. It may not. I may kind of, this might lengthen out, but definitely from a fundamental basis, Royce, a lot of sellings happen. Sellers are exhausted. There's a fundamental use case. They're in nuclear technology. They're in airplanes that are going to be coming back online. They're partnered with Virgin Galactic there. They're doing a lot of things. They've got generators, they've got electric vehicles. So they're doing all the right things in the right spaces in the bullish areas. So wouldn't be surprised if you see Royce kind of do some great things. So that's why I'm putting a little bit of money in that trade. And just for those of you that want the update, we are in HarmonyOne a lot on this channel. Just wanted to kind of point out what's going on there. So yeah, we know that this thing broke out. The 0.5 cent level was a great spot to get in. And we had a huge run. A lot of people made a lot of money out of HarmonyOne, but now we're in that kind of ending phase. So we're still in an uptrend, as in steep rise, but kind of pullback. But the fact that the 30-week moving average is still inclining and we're potentially going to break out of it again is a good thing. It tells me that we've still got that upside to come. But what I'm cautious of is that this pattern that's playing out is a bearish, ascending wedge. So essentially it's telling us that it's closer to the end than the start, basically. So what am I seeing? We're bouncing off this bottom rail. We're going to head up. We could head back down. So we could kind of bounce all the way up here and, take all this time to get up there and then drop down. Or we could just kind of, take it out into alt season and then come back down. Who knows what will happen, but either way, it's telling us that in a while, in not too many more percent, as in, a 5x maximum, 6x maximum, from these price levels anyway, we're going to break out or grind our way up and then kind of make a drop. But usually what I find and I've been watching a lot lately about what happens, so if it's a bearish wedge, a lot of the time it grinds its way up, fakes its way out, last chance to get out, and then it kind of drops. Whereas if it was a, you know, if it was a bearish ascending wedge, a bullish ascending wedge. So if it was doing something like this, you might find that the price would grind, you know, down like that, fake down, and then go up. You know what I mean? So it's kind of it kind of does the opposite thing first of what you're expecting it, and that's the kind of shakeout of everyone that's on the same side of the trade, right? What else have we got? Hathor Networks. Hathor Networks, once again, doing its thing. We've got a channel here. We have the history that says that it touched off the channel, it's pulled back to the channel, kind of hovered in between the channel, touched on the bottom edge of the channel. So once again, I'm expecting at some point, and the further out we go, you know, is it if it jumps straight up now, we're in the $6 range. If it jumps straight up now and gets all the way up, $12 range. So the longer this takes to play out and stays in this channel, and when it touches the upper edge of that rail, the higher the price is going to be. So we'll see what happens. We'll see what happens. But, you know, obviously we can't expect it to happen, so we still need to be diligent and watching the price action and understanding that it's held the key level, and we hope that it holds this key level for now. Huge volumes in here. Even though there's big red volume bars, it just means that some people are selling out, some people are buying in. So there's just good volume. There's good trading going on it, and I don't mind that. And finally, game credits. So I've had a different look at this. I had the arc on this originally, and I got some targets up there. But once again, you know, just noticing that, you know, since 2019, there was a bottom, and it's been higher highs. Higher lows. So higher low here, higher low here, higher low here. So you can look in on intraday price action and go, you know, not much is going on. But the reality is it's following a channel trend. So by the end of the year, if game credits is still in the game, you know, and it touches up here, we've got at least, you know, these targets to look for. Now, once again, I believe that it's going to break out higher. You know, I think it's going to test at least the 230 level, and potentially all-time highs. We'll see what happens, but game credits is doing the right thing. You know, it's reacting off this lower edge of this channel, and hopefully it bounces up to the upper edge of the channel, and we get to take some profits on it. But either way, what are you're looking at? You know, like a 10 to 20x from here, which is still a great opportunity if you've got some play money you're willing to invest in these lower market cap projects. And the final one I just want to put on people's radar, which is once again, you know, high potential for big gains here, is the natural gas reversal. So we've got this small, you know, arc playing out since, since not too long ago, since December 2018, so a couple of years. So it's been in that stage for downtrend, a kind of a breakout of the 30-week moving average, which was a great little run that happened there. But what happened is it reacted to a longer-term downtrend. So this is a leveraged play on the price of natural gas. But either way, you know, downtrend line, touch, and touch. So it's saying that even though we've had a good run recently, it's reacted again, found the bottom of this arc, and then we're looking for that reversal and to get ourselves all the way out there to this particular level again, you know, where the arc started. So from there, you know, if we're looking at a £3 price at the moment, or a $3 price, or whatever it is, whatever currency it's in, we're looking up to a 30. So we're looking at, once again, a 10x move from here, and that could happen as, you know, as early as July, August, October, September, October, depending on, you know, how volatile it gets. So it could kind of slow down its trend, it could kind of up its trend. But I think that based on what's happened so far, we could kind of safely say that something like this is going to play out. So we're seeing it just kind of test the bottom edge of the rail. Once again, a good entry point, good time to get in. I've been accumulating this one through the bottom, and I will continue to accumulate below the 30-week moving average and on the breakout, and then kind of let it run. So natural gas is definitely a play, and especially this large natural gas reversal, because, you know, once again, if you've got the time and the patience, if you hold on all the way out to this full reversal, you know, we're talking about, 5 or 10 years now, I don't think I'll hold this asset for that long because so much will happen in between. But that's where we're heading. So buying the bottom here and the top there, 10-year investment, potentially could be a very, very rewarding trade. But who knows whether this 2 times leverage token will be even around then, if you know what I mean. So definitely, I would, if I was playing this asset all the way to the top, I would be in and out of it the whole time. I'd be kind of in, trying to get out, buy back in, out, in, out. So that's the story there. And finally, just my thoughts on Bitcoin and where the leader is at. Once again, downtrend, recent kind of sell-off from that all-time high. Found a bottom. We haven't retested that bottom, and the fact that we're going, there's been a trend reversal on this weekly, and we've broken that downtrend marker. I don't think we will go back down to this line. I think if we're gonna retrace from here, or correct from here, it's back down into this corner, 38,000-ish, and then kind of grinding its way up there. So if it's going to correct, it's going to correct down here, and then kind of head on the way up there, maybe bounce back down, maybe kind of do something like that. Who knows where it wants to end, how it's going to play out, but either way, it would be quite normal for it to stay in this kind of range, find its way, to nearly an all-time high again, and complete the kind of shoulder, head, shoulder pattern. You're likely to see this kind of triple topping going on the right shoulder, so it's symmetrical. So triple top on the left shoulder, kind of double top on the middle head, and then a triple top on the right shoulder wouldn't be that crazy to see, to really kind of suck people in that it's going to break out, but then it just kind of plummets. So, and that would complete that, the topping arc very nicely, wouldn't it? So yeah, and what a lot of people are saying is that hopefully during this retracement or this, reversal and uptrend of the topping pattern of Bitcoin, that hopefully this is the rotation into the altcoins. And where people that have been in Bitcoin for a while and made some money want to make some more money, or people that are in there and haven't made enough money are like, I'm going to sell Bitcoin and just go dump it into a YOLO altcoin. That's when you start to see some real fiery action, when this market cap becomes into the altcoin market caps before everyone gets out, takes the money and runs for the bear market. Well, that's it for now. I'm not going to touch on too much. It's good to have seen some green action recently. But yeah, stay strong. And if you are holding, like my time preference is kind of, things will be kicking off this month, and I think they've started for sure. I can see the markets are getting more positive in action, and kind of into March. And I think March will be a very good month. And then some of our laggard coins, potentially like the game credits, and that might take, all the way up to June to actually kind of top out and find their local highs. So I've been Jared, this has been Crypto Plan. I hope you've had a great day, and I'll hopefully catch you on the next one, and stay strong. Bye now.